All right, let's dive right in. Goldman Sachs just dropped its big 2026 outlook, and honestly, it's way more optimistic than you might expect. We're going to walk through exactly what they see coming for the economy, for stocks, and for commodities, and what it all means for you.
So here's the game plan. First, we'll tackle the big picture, the global economy. Then we'll see what that means for stocks and then for commodities. And finally, we'll wrap it all up with the key things you need to remember. Let's go.
Okay, let's start with the one number that really drives this whole thing, 2.8%. That's what Goldman is forecasting for global GDP growth in 2026. This number, it's the foundation for everything else we're about to talk about.
So the big question is, how does that stack up against what everyone else is thinking? Let's get into the global macro picture and see why Goldman is feeling a bit more bullish than the rest of the market. And wow, this slide really lays it out, doesn't it? You can see Goldman is above the general consensus pretty much across the board. But look at the US. They're calling for 2.6% growth, while most others are down at 2.0. That is a huge difference. So why the optimism for the US in particular? Well, they're pointing to a few key things. They think the drag from tariffs is going to ease up. They're expecting some tax cuts, and this is the big one. Financial conditions are getting easier. Basically, they see the Fed cutting rates, which makes it cheaper to borrow and spend, kicking the economy into a higher gear.
Okay, so if the economy is looking that strong, what's that going to do to the stock market? That's the million-dollar question, right? Let's jump into our next section on equities.
Now, over the next decade, they're actually calling for some pretty healthy returns, about 7.7% a year for global stocks. But, and this is a big but, the story for 2026 itself is a lot more complicated. There's this real tension that investors are going to have to navigate. And Goldman has this great phrase for it. Some like it hot. You know, it captures this core dilemma perfectly. A hot economy is awesome for growth, but it comes with risks. It can lead to overheating, especially when stock prices are already high. So it really is a balancing act. On one hand, you've got this great news. Solid growth means good company earnings, and the Fed is likely going to cut rates without tipping us into a recession. I mean, that's the dream scenario. But the risk, the big catch, is those hot valuations. Stocks are kind of pricey already. That means we should probably brace for a bit of a bumpier ride, and maybe not the massive gains we saw in 2025. And there's another really cool part of their equity thesis. They're calling it a tectonic, which points to a broadening bull market. The idea here is that it won't just be a few giant tech companies doing all the heavy lifting anymore. We're going to see other parts of the market start to join the party.
All right, so we've got the economy, we've got stocks. Let's shift gears and talk about the physical stuff. You know, oil, metals, all those key commodities. How do they fit into this picture?
I love this headline, Ride the Power Race and Supply Waves. It just perfectly nails the two huge stories driving commodities. This isn't just about simple supply and demand anymore. It's about geopolitics, the race for AI dominance, and these massive shifts happening in where we get our energy. And this slide breaks it all down. You've got this AI power race between the US and China, which is just gobbling up energy and raw materials. Then you've got these big shifts in global energy supply. And all of that is sitting on top of the strong economic base we've already talked about, solid global growth, and a helpful Fed that's expected to cut rates. It's a pretty powerful mix.
Whew, we have covered a ton of ground. So let's bring it all home. We're going to boil this entire outlook down to the most important takeaways for you.
Okay, if you walk away with just 4 things, let it be these. First, Goldman is betting on stronger than expected growth, with the US leading the pack. Second, for stocks, expect a good year, but a bit choppier and with more moderate returns than 2025 as the rally broadens out. Third, the Fed is your friend here, expected to cut rates and support the market. And finally, keep an eye on commodities. They're right in the middle of this AI power race and big energy shifts.
And that really brings us to the final question for you. When you look at this whole picture, strong growth but pretty high valuations, where you see the best opportunity? Are you betting on US stocks to keep running? Are you looking at the rest of the world to catch up? Or do you think commodities are the place to be? It's really the big question every investor has to ask themselves heading into 2026.